Hi, this is Ipek Ozkardeskaya, market analyst from London Capital Group. We have been through a quite very volatile week and the volatilities are expected to continue from the next week. The focus is going to be on central bank decisions. The ECB, the Reserve Bank of Australia and the Riksbank are expected to give policy verdict from next week. The main highlight is still going to be the US jobs data on Friday. On Monday, Japan is going to release its industrial production. The industrial production in Japan is expected to have slowed in July, mostly due to global stagnation. However, we do not expect any major price action following the Japanese data. The Eurozone CPI estimate is going to be another important data on Monday. We expect the CPI data to gain little traction as well, as August is expected to have been a slow month. September could be a better month for a pickup in consumer prices. This is why we do not expect any significant price action due to the Eurozone CPI estimate release. On Tuesday, Japan is going to announce its capital spending. The Japanese capital spending in the second quarter is expected to have surged from 7.3 to 8.9%. But more importantly, China is going to release the manufacturing PMI. Knowing that the Chinese manufacturing activity has hit a 6-year low recently, we are very much interested to see whether it is possible for China to reach a 7% growth target by the end of the year. The Reserve Bank of Australia is going to give policy verdict on Tuesday and is expected to maintain its cash rate unchanged. The Aussie is trading to levels very close to the RBA's midterm target of 70 cents. However, the door will still be left open for further easing in rates should the slide in commodity prices continue toward the end of the year. On Wednesday, Australia is going to release its growth figure. Australian GDP is expected to have slowed down from 0.9% to 0.4% in the second quarter. This is mostly due to sliding commodity prices, but also the slowdown in Chinese economy. In the US, the Adp Report is due on Wednesday. The US economy is expected to have added 200,000 private jobs in August versus 185,000 a month before. Even if the correlation between the ADP and the NFP numbers is quite low, this is going to be an indication before Friday's NFPs. On Thursday, European Central Bank is expected to maintain the status quo. Given the recent volatilities in the European markets and the euro, we are very much interested on what Mario Draghi has to say on the recent market developments and how it's going to shape the European Central Bank's monetary policy in the future. On Friday, US jobs data will be keeping the market busy. The most important highlight of the week will be the US jobs data on Friday, as this is going to be the last labor market data before the very much expected FOMC meeting in September 17th. Given the rout in equity markets this week, the market expectation for a September rate hike has fallen to 30%, and that despite the strong upside revision in the US growth. The market expects the US to have added 218,000 non-farm jobs in August versus 215,000 last month, lower than 12-month average of 242,000. A read between 200 and 245,000 should therefore keep the base case scenario for a December hike. A read below the psychological 200,000 threshold could revive the Fed dose and push the Fed expectation for the first rate hike back to 2016, while a read above 245,000 will bring uncertainties on September hike back on the table. We expect next week to be high in volatilities. Good luck trading.